Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be covering the merger between USBTC and Hut 8 Mining. This is one that's been in the works for quite some time, and Sue Ennis is back to walk us through the deal and the post-merger metrics for the new organization. Now in addition to Sue, we're going to be joined by the president of New Hut, so we've got a lot to go through in today's presentation. But before we do, please take a second, hit the like button. It really helps get this content to other people who may find value. If you're not currently subscribed to the channel, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of Hut 8 Mining, what you think about the new organization, and your thoughts in terms of share price moving into next year's halving event. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got two special guests for you, both from New Hut. This is a merger that we've been following closely for quite some time. First, we've got Asher Genoot, who's the new president of Hut 8 and the co-founder of US Bitcoin Corp. And then of course, Sue Ennis, who's been on the channel a number of times, major player in the space, and Hut 8 continues to grow. You guys were so excited to see this merger finally over the finish line. So welcome to the channel and thanks for taking some time.
Hey guys.
So I guess first things first, I know this has been a long time coming, super exciting time for the Bitcoin community, the Bitcoin mining space, Bitcoin price in general. What does the closure of this deal really mean for Hut 8 and the future of this organization?
I'll let you take this.
Yeah,
He's our president.
We're very, very excited that we have finally concluded the transaction and now we're a post-merged entity. And so when we first started conversations, when we signed our definitive agreement earlier this year, we felt that both companies had parts of their businesses that they lacked in each other. And so really 1 + 1 in this situation equaled 3, because with the combination of the two, we would have been able to build that much of a stronger company. So on Hut 8's side, they've been very thoughtful in their balance sheet and capital allocation strategy and building a very strong balance sheet, obviously almost 10,000 Bitcoin that they've hodled, and also a very strong supporting public stock that with a lot of shareholders and investors that have supported them throughout the years. On the US Bitcoin side, we were private, and so we just put our heads down and got to work, and we built scale. We focused on operational efficiency. We built our own proprietary software in-house and really wanted to focus on being the best-in-class operators. And so today we're over 800 megawatts under management. We have hundreds of thousands of machines that we manage. And so the thought process is we bring that operational excellence to a company like Hut 8 that has a strong balance sheet and a strong public support and following already. And now we have a Goliath of a company within the space that's able to compete at the highest levels and is a diversified entity. We're not a pure play, just self-mining Bitcoin mining company. We have Bitcoin mining, self-mining. We have hosting where we take other people's machines and we manage it for them. And we also have managed services, which is a really interesting segment I think we created in this market, where we manage facilities for third parties, full stop A to Z, everything from operations, site build out, safety and compliance, audits, legal, etc. And we just run it for them turnkey. And so that business vertical has been extremely exciting and has had a lot of growth opportunity in this last year and a half. And then the fourth is what Hut 8 has had is their HPC and traditional data center business. And so now we have this interesting kind of multifaceted, post-amalgamated business where we have some verticals that are stable cash flows, where regardless of Bitcoin volatility, we have a strong floor and we have a protected downside. And then we have other opportunities where as Bitcoin prices rise and hash prices rise, we capture all of that upside like some of our peers in the space. And so we're excited to continue growing across that diversified strategy. And now with a strong balance sheet and with kind of a lot of targets in sight, we're looking to continue to scale both through kind of traditional organic means and continue to look at opportunistic situations like we have in some of the most recent bankruptcies.
Yeah, also, I just want to piggyback on that. So if you zoom out and look at what the amount of global hash rate that Hut now manages, it's over 1 gigawatt. The total global net Bitcoin network right now is only 5 gigawatts worth of power. We're managing 1/15 of it. That is that is a ton of market share if you look at it from that perspective. And on the managed services side of the business, which I'm sure we'll get into, two of the biggest opportunities we're particularly seeing is in two trends that we've seen over the past year, particularly pick up quite a bit of steam, and that is in the renewable power operator space. So renewable operators using Bitcoin mining as a utility for load balancing, and then in the oil and gas space, we're seeing an uptick in oil and gas providers using mining as a methane mitigation strategy. COP28 happened last week. All anyone was talking about was methane. We have to cut it. Now, our thinking and what we've already seen, because we've signed and partnered with 2 Fortune 200 renewable power players, is that we don't think these big boys are going to want to hire their own Bitcoin mining teams, procure equipment on their own, run the facilities, manage the software, do the billing, find clients if they want hosting in those facilities. And this is where that managed services business piece comes in. This is why we are so excited and think this is like the killer app of New Hut. It's like the CBRE, the JLL, those trade at 19 times forward earnings. That is what this business is. And we don't think the market fully understands it yet. But anyways, that's why we're here. So yeah, just wanted to piggyback on that.
No, it's a good point, and I definitely agree. I don't think the market fully understands it. Of all the Bitcoin miners, I would say Hut 8 is probably the most diversified now. You do have that awesome balance sheet. We've joked about Jamie holding on to those Bitcoin very tight over the years, so you can thank her for that. And I'm curious to dig into all those components a little bit because there are so many facets of this business now. So you mentioned the total power capacity, I suppose. Are you able to give us some details on number of sites, exahash per second in terms of self-mining, number of rigs? Do you have any of those details now in terms of the overall new organization?
So we will have those hopefully publicly disclosed very soon, like what this new snapshot looks like. But Asher, maybe you can speak to the public, the press release you guys issued back in July.
Yeah, so we have over 800 megawatts of capacity online. That's over 200,000 machines under management across the 3 verticals of self-mining, hosting, and managed services. And so pretty big footprint, over 20 exahash if you kind of just look at those numbers that we posted in our release a couple months ago. And so on the US Bitcoin side, historically, we've been a private company, right? And so we haven't done much press and PR because our thought process is always, all we need to do is put our heads down and just get the work done. And we'll get the customers, we had investors come, et cetera. And obviously now as a public company, we have to do more market education and really kind of share who we are. And so we're excited by this because I don't think people realize the scale of this business and how much of a footprint we have in operations and management across the ecosystem. And I think through conversations like this, we'll be able to shine a brighter light towards kind of the scale that we've created. And really one big part of kind of our model is by having these 3 verticals on the crypto digital asset side for self-mining, managed services, and hosting, we create this economies of scale. And it's like the Costco model where the bigger you get and the more buying power you get, the cheaper your end kind of supplies become. And you can share those cost savings amongst all your members. So similar for us, as we grow bigger and bigger, we have more consumption of power. We have more raw materials that we buy, more construction needs. And with all that, we're able to have pricing, bargaining power, and we're able to drive those prices down, both for ourselves and people within our network that we manage the machines for them or manage their facilities for them.
Gotcha. Yeah, I really like that. The Costco analogy is great. I was just there on the weekend. I love that place. But anyways, you said 20 exahash overall between the 3 verticals. I imagine you're not able to give a real detailed breakdown at this point. Are they similar in size or in terms of self-mining, would that take the majority of that 20 exahash?
So we've announced... Yeah, we've announced the self-mining exahash number, so post-amalgamated over about 7.3 to 7.5. So those numbers are kind of public in our investor update that we've shared. And so in terms of the actual breakout, we're going to start providing, as Sue mentioned, more documentation around our business and how we think about segmentation to kind of have folks understand how our business is and how different verticals are scaling over time. And so that's a part of kind of market education, because if you think about the different verticals, to what Sue mentioned, how we think about it, you have self-mining, right? In self-mining, there's a lot of public mining companies out there. There's comps on there in terms of your overall hash rate, the amount of Bitcoin that you mined, et cetera. Then your second vertical, and there's the trading there based on kind of, it's really a levered Bitcoin play, right? As Bitcoin runs, you have this levered proxy to Bitcoin. So, and then you have this hosting business. In hosting, we actually have two models. One is we have kind of a fixed fee where we get a fixed payment from our hosting customers every single month. And so that creates a protected downside, fixed margin business that we have. And it's kind of like a traditional data center colocation business where people sign up on a fixed term and then they basically pay you and you have your fixed margin locked in. Some of our agreements are a little bit more bespoke. We actually get an upside share. So we give them a little bit of a discounted fixed rate. We get an upside share as their hash price increases and as they make more, right? So we capture some of that upside as the markets run. And so again, for our business, really our focus is protect the downside to manage through volatility and manage through bull and bear cycles, but try to maximize uptime when the markets really run. So that's kind of the second segment. The third segment is managed services, where it's really a kind of strong operating arm of our business, where we manage facilities on behalf of other people. It's a pass-through cost-plus model. And as Sue mentioned, you have CBRE and JL that trade at pretty healthy EBITDA multiples based on those businesses, because it's a stable, contracted kind of revenue stream over a multi-year period. And then you have like our HPC, cloud, co-location, AI side of the business, where it's basically all the traditional data center side of the business. And so as we think about those four, I think as we continue to educate the market and as we continue to talk about these business segments and kind of the growth and different initiatives that we have, folks will be able to put together a holistic kind of understanding of the business and a value proposition that we provide.
Gotcha. Now, the other question that I have here, Sue, you and I have chatted a lot, especially through the bear market, that Hut was really looking at new revenue ideas, recurring revenue, which you just mentioned there. Obviously, investors love that, and really building this strong base to protect the downside, which is exactly what you said, Asher. So now that we're seeing Bitcoin prices appreciate, we've also got the halving coming up next year. Obviously, the emphasis is going to be go as hard as you can on mining. How does your guys' fleet position you in terms of efficiency currently and going into the halving next year?
Yeah, so again, we hope to have some meaningful disclosures out for you guys as soon as possible. I think our fleet right now, we were in Cantor's crypto analysis report, and we're in about the 30J per terahash range, more or less. But I think one of the things that we also loved about this team is the fact that Mike, the other co-founder of US Bitcoin Corp, he was actually one of the original procurement officers for Marathon and Riot. And so I believe, Asher, it was Bitmain. He was like Bitmain's number 3 customer back in the day. And so Mike has these tremendous relationships across the supply chain, particularly as a with respect to machines. I think also we were talking this morning, one of US Bitcoin Corp's claim to fame was really not ever paying bull market prices in the last bull market, because again, they are very, very, very careful about identifying the right arbitrage opportunities and just being in the right place at the right time. So that's my long-winded answer of saying, sit tight. We are, we just started trading on Monday. We're going to come out with the data that you guys need in order to get a sense as to just how sexy this new company is and some of the major operational strengths and supply chain relationships that these guys bring.
Yeah, we're super excited to see that, and it feels like it's been a horse waiting to get out of the gate for over a year now, and now you guys can finally run. So with that being said, now that this big milestone is out of the way, what are kind of the next few catalysts we should keep an eye on here for the new Hut?
Asher, I'll start and then you can piggyback. So number one is the Celsius deal. So Asher and Mike, they love bankruptcy shopping. They're bankruptcy junkies. And they were successful in the bid for Celsius's assets over the summer. What's included in this deal is 122,000 machines. We've already got 8,500 that are being hosted in our alpha site. And Asher, I'll let Asher talk more about some of the really fun parts of that deal. So certainly watching developments there, because it's is quite meaningful. AI. So we put in our S4 that we placed an order for H100s. About 1,000 H100s are on order. Again, Mike is going to be our chief strategy officer. All he has been doing is focusing on our AI strategy. We do have indication that we feel confident we'll be able to get those servers by the spring. So certainly watching, where those go. Those are incredibly sexy margins. And then, yeah, Asher, I'll let you take over. But those are the two areas that I think are really exciting.
Yeah, so echoes Sue sentiment there. I've been working hard on those two growth initiatives, and I mean, really, it's just producing results, right? Like as soon as the merger closed, everyone was super excited. Obviously, we're doing time educating the market now, but I'm like, you know what? It's time to roll up our sleeves and really get to work here. So on Hut 8's current operations and their mining facilities, we spent a lot of time kind of having our high side behind our back because we couldn't gun jump or do anything pre-merger. And so it's really working to kind of address some of those concerns that have happened over the last couple of quarters and what's the best way to kind of maximize those assets, best returns on those assets. So I think it's really creating a robust and being very confident in our current operations and how we're delivering results, in addition to, because I'm a big believer, if you prove strong results, people are going to want to work with you. You're going to get more deals and you're going to get more support. I think for Celsius, the reason we were chosen to be their partner in bringing these assets out of bankruptcy and to really create massive equity value was we were able to execute, and we were able to show that execution to them and get them comfortable that we were the people that they were going to choose to help them bring over 122,000 machines, 12 exahash of miners out of bankruptcy into a real operating entity with real equity value, right? And so in my mind, it's pretty simple. It's just heads down, focus on execution, and produce results.
Yeah. And also, like, just to be super specific on what Asher's talking about, we know Drumheller has been a problem. We are very aware of that. And now we finally have their technology that we can bring in. We can start troubleshooting. We can start looking at how we optimize. Because obviously the market wants to know, like, what the hell are you doing with this site? It's time to get to business. So now that it's time, we're doing that. Certainly the 12 exahash of equipment that are machines that came with the Celsius deal, super meaningful. So yeah, and also guys, reminder, these are the guys who stood up 1 exahash within 43 days, which is literally unheard of in the industry. So again, we're working super hard to produce results and results that you guys can see and weigh against our peers. And we feel really good about that.
See, Asher, that's why we love Sue. I'm not going to come out and say those type of questions, but no, we appreciate the transparency as always, Sue. We understand that this is very fresh. We're obviously wanting a lot of data, but we understand that takes a little bit of time to consolidate. So we look forward to following this along. We'd love to have you guys back in a couple of months once you've had the merger fully integrated. And I'll kick it back to you for any closing thoughts, but appreciate the time from both of you today.
Again, thank you so much for having us on. I'll kick it over to Asher because Asher is who we really want you guys to get to know, and Mike as well. So Asher, I'll leave it to you to sign off.
Thanks, appreciate it. I appreciate you having us. I think kind of key takeaways on our side is continuing to create a diversified business where we protect on our downsides and we maximize the upsides through kind of market volatility. Number 2, focus on execution and really providing results. And number 3, I think more education to the market around the scale we have to date. We're one of the largest operators of mining facilities, both in the US and globally. And so really helping educate the market on the scale that we have today.
Sounds like a plan. And the timing couldn't be better, you guys, going into this big exciting time for the Bitcoin market and Bitcoin cycle in general. So appreciate the time. If you guys are still watching here, make sure you hit the subscribe button, hit the like button. It helps get this content to other people who may find value. Sue, Asher, thanks so much for being with us here today, and we look forward to having you back soon.
Thanks so much. Bye, guys.